Okay. Let me share my skin. Yeah. Okay. Yeah. So to start with the introduction of financial system in India, we need to understand what it is composed of. So basically, the financial system is composed of the product and services which are being provided by uh, financial institutions. Like the financial, now you'll be asking about what are financial institutions. So these institutions are the banks, the insurance companies, the pension funds, okay, and other companies who give these facilities or you give this economic transaction. So, talking about India, it has a financial system that is controlled by independent regulators in the sectors, like the sector of insurance, banking, capital, and various sectors. So, virtually all economic transactions are affected by one or more of these institutions. They create financial instruments such as stocks and bonds, pay interest on deposits, lend money, and create and maintain payment system of modern economies. So that is what the financial system is comprised of. Now, when we talk with reference to financial system, it implies a set of complex and closely connected, or you can say interrelated institutions or the agents or the markets in the economy. So the term financial system includes a complex of institution and mechanism which affect the generation of savings and their transfer to those who will invest. Okay. Also, it can be termed as that it is made up of all those channels through which savings become available for investment. Right. Uh, like there are complex institutions like the financial institution or intermediaries. So intermediaries, banks will come under this category, insurance organizations, right? Then we have financial market comprising of capital and security market. And lastly, assets and instruments such as shares, debentures, unit derivatives, and so on. So these financial product and services are based on the financial objectives. So, what are these objectives? Basically, to create and maintain financial markets that provide prices and to collect and disseminate information that facilitates the most efficient allocation of economic resources. Then, to create time value to money and to provide a payment system and to offer product and services to reduce financial risk or to compensate risk taking or desirable outcomes. So that was the introduction part of financial sector. Then, when we talk about the formal financial sector, it comes under the Ministry of Finance, the Reserve Bank of India, RBI, and the Securities Exchange Board of India, that is SEBI, and also other regulatory bodies are there. These bodies, like individual money lenders, such as relatives and store owners, then group of people operating as funds or associations are there, right? Then partners firm consisting of local brokers. So all those things consist of the financial system, informal financial systems, right? Formal are these government organization and informal could be anybody who is lending money to you, who is providing financial assistance to you. That will comprise of informal financial system. Now, uh, we will discuss about there are like this financial system has a crucial significance to capital formation. So the process of capital formation involves basically three interrelated activities. So what are these interrelated activities? These basic activities of financial management, or you can say financial markets, these consist of the very first thing is the saving part. Then we have finance and the investment. While talking about savings, the ability by which claim to resources are set aside and become available for other purpose. Then finances, that is the activity by which claim to resources are either assembled from those released by domestic savings and obtained from abroad or specially created usually as bank deposits. Then comes investment. So the activity by which resources are actually committed to production, the volume of capital formation depend upon the intensity. Also, the effective mobilization of savings, the efficiency of financial organizations, system, and the channelization of these savings into the most desirable productive form of investment are all interconnected and have a great bearing on contribution of capital formation to economic development. Okay. Now, this financial system help what? It helps in production, it helps in capital accumulation and growth of encouraging savings. Also, allocating them among alternative users. So each of these function is important and the efficiency of a given financial system depend on how well it perform each of these functions. Now let's talk about these functions. Okay, so basically our financial system not only help in selecting projects to be funded, but it also inspire the operators to monitor the performance of investment. It provide a payment mechanism, basically a payment mechanism of formation, and that has been provided for exchange of goods and services. Okay, and a transfer economic resources through time and also the geographical region and industries. Then there are banks which provide this mechanism by offering a mean of payment facility based upon checks, notes, credit and debits card. Also, there are some contemporary mechanism include NEFT transfer, that is National Electronic Fund Transfer. Also, RGTS, that is real time gross settlement. You all must be knowing about these two transfers, right? Then, an efficient financial system aim at containing risk within acceptable limit. It reduces risk by laying down rules governing operations of the system. Risk reduction is achieved by holding diversified portfolios and screening of borrowers. Financial markets basically disseminate information for enabling participants to develop an informed opinion about investment, disinvestment, reinvestment, or holding a particular asset. Well, this information disseminate enable a quick valuation of financial assets. Also, besides that, our financial system also minimize cost of gathering and analyzing information to assist operators in taking decisions effectively. Also, it also offers portfolio adjustment facilities. These are provided by financial markets and financial intermediaries. We have already discussed about intermediaries. Those are banks and funds. Then these portfolio adjustment facilities include services of providing a quick, cheap, and reliable way of buying and selling a wide variety of financial assets. Then Financial system is a highly, we can say, efficient mechanism for mobilizing savings also. So in a fully monetized economy, this is done automatically. So when in the first instance, public hold its saving in the form of money. However, this is not only way of prompt mobilization of savings. Then on the other hand, financial methods used are deduction at source of the contribution to provident fund and other saving schemes. More generally, you can say that mobilization of savings take place when savers move into financial assets, whether currency, bank deposit, post office saving deposit, and other equity shares, insurance policies, all those. Well, another talking about another function of financial system is to arrange a smooth, efficient, and socially equitable allocation of credits. With modern financial development and new financial assets introduced into market, institutions with market become more organized and playing an increasingly important role in providing of credits. Through their allocative functions, financial institutions are granting easy and cheap credit to various firms, enabling them to move out of resource constraint and grow faster. Then, talking about savings part. Uh, Financial systems basically promotes savings by providing a wide variety of financial assets aided by the service of financial markets and intermediaries of various kinds. So you can say that is the basic functions of financial markets that comprises to encouragement of savings. So for wealth holders, all this offers ample choice of portfolios with attractive combination of income, safety, and yields. Also, with financial progress and innovation in financial technology, the scope of portfolio choice has also improved. Therefore, it is widely held that the saving income ratio is directly related to both financial assets and financial institutions. That is, financial progress generally ensures larger savings out of the same level of real income. Financial assets command certain advantages over some tangible assets. So these tangible assets could be the physical capital, inventory, all those. They are convenient to hold. Excuse me. Yeah. So we were at savings part. So a very important property of financial asset is that they do not require regular management of the kind most tangible assets do. So the financial assets have made possible the separation of ultimate ownership and management of tangible seeds. What are the tangible assets? So these are the physical and the physical capital which you hold and the inventory of goods. So those consist of tangible assets. Also, the separation of savings from management has encouraged surplus holders save regularly. Savings are done by household sector, then there are domestic private corporate sector and also public sector. So basically classification adopted by a central statistical organization known as CSO by government of India. So these are the basic, you can say, the functions of the financial system in India, which we have discussed now regarding the allocation of funds, the encouragement of savings and mobilization of savings. Other than that, there are other functions which comprises of, you can say, contemporary mechanism, like fund transfers, all those things. So this was about the functions of financial system. Now, well, the financial market, talking about the financial market, you can say the financial market, for financial, uh, it is a market for financial transactions. So, like issue of equity stock by a company, purchase of bonds in the secondary market, deposit of money in a bank account, transfer of funds from a current account to a saving account. So there are the market in which money as well as monetary claim is traded in. So financial market, you can say, can be defined as the market in which financial assets are created or transferred. So when you have been asked about to define a financial market, so the basic definition is like where the financial assets are created or transferred will be termed as financial market. So a real transaction that involves exchange of money for real goods or services. A financial transaction involves creation or transfer of a financial assets. Well, a financial assets or financial instruments represent a claim to the payment of a sum of money sometimes in the future and or periodic payment in the form of interest or dividends. Now we'll look into certain financial market functions. Well, it is the functions are could be to facilitate creation or allocation of credit and liquidity, to serve as intermediaries for mobilization of savings, also to help in the process of balanced economic growth and to provide financial convenience, then also to cater to the various credit needs of the business organization and to provide information and facilitate transaction at a very lower cost. Now, we'll talk about some financial institution which ensure smooth working of financial system. How do they do that? That is, they do by providing a platform for investors and borrowers to meet. So they mobilize the savings of investor either directly or indirectly through financial markets, through different financial instruments. So in this process, financial services firm provides support to channelize the funds. So the financial services firm offer a wide variety of services like advising of different problems ranging from leasing, structuring of financial instrument and restructuring, diversification, raising funds from the market, taking care of financial assets. Also, these institutions can be categorized in, you can say, the regulatory or financial institutions or banking institution or non-banking institution. Well, the banking and the financial system of the country is regulated by the regulatory institution by issuing broad guidelines or you can say instructions. So the major regulation bodies are RBI, SEBI, IRDA, PFRDA. And so these independent regulators work in the field of banking, capital market, insurance, pension funds, and commodities market respectively. Also, when we talk about a banking institution, so these institutions mobilizes savings of people. So they provide a mechanism for the smooth exchange of goods and services apart from channelizing funds towards productive purpose. So basic categories of banking institutions are commercial bank, you can say, or the cooperative bank and developmental banks. Also, there are non-banking institutions. They also mobilize financial resources, maybe directly or directly to the people. So basically, they lend fund but do not create credit. Companies like about LIC, so they develop in financial institutions. So they all fall in this category. So non-banking financial institution can be categorized as investment companies, housing companies, leasing, hire purchase companies, like a specialized financial institution like Exim Bank, and all those. So these were the non-banking institutions. Now, there are various components when we talk about these markets. So the money market is a wholesale debt market for lower risk, higher liquid term instrument, you can say. Then funds are available in this market for period ranging from a single day upon a year. So these market is dominated mostly by government, banks, and the financial institutions. Well, the capital market is of medium and long term instruments. The instrument traded in this market will be for period of a year. So that is termed as the capital market. And what was the money market? So the money market is a wholesale debt market. So where there is low risk and high liquid and short term instrument. So always funds are available in this market from uh, a single day, or you can say from single day to a year. So this market will be termed as money market. And when we talk about capital market, so capital market is for, you can say, the medium range to long term. And over here, the market, the instrument traded here will be from for a couple of years, you can say. Then next is foreign exchange market. Well, these market deals with the multi-currency requirement, or you can say the foreign currency, which are met by exchange of currency. So depending on the exchange rate, transfer of funds take place in this market. This is the most developed and integrated market across the globe. Which market? Foreign exchange market. And lastly, we have the credit market. So it is the place where banks, financial institutions, non-banking institutions provide short, medium, or long-term loans to corporate and individuals. So that is termed as credit market. So over here in credit market, all the financial institution, be it the government or the private ones, they provide credit to everybody, either to companies or to individuals. So that was about, you can say, the components and the functions of financial market. Kindly excuse me for a minute. So that was about the financial systems and the various components and the parts of financial systems. Well, when we talk about the products which are traded in a financial market, are financial assets, securities, or other type of financial instruments. So there are a variety of range of securities in the market, since the need of investor and credit seekers are different. So for to cater all those needs, there are a variety of instrument available in the market. Now, they indicate a claim on the settlement of principal down the road or payment of a regular amount by means of interest or dividend. Now, basically, these instruments can be categorized in three categories, like capital market instrument, money market instrument, and hybrid instrument. Well, the instrument used in capital market are equity shares, preferred shares, debentures, and bonds. Capital market is the market for securities where companies and the government can raise long-term funds through instruments having long-term maturity tenure, that is beyond 1 year. It is a place where the buyers and the sellers of the securities can enter into transaction to purchase and to sell the capital market instrument like share, debentures, etc. So that is capital market instrument. Next, we have money market instruments. So these instruments used in money market are called call or notice money, treasury bills, term money, certificate of deposit, and commercial papers. So money market can be identified as the market for short-term money and financial assets that are near substitute for money. Generally, these instruments have a maturity period up to 1 year, right? So they consist of money market instrument. Well, a hybrid financial instrument is an investment vehicle that blends the characteristics of both the equity and the debt markets. The most common form of a hybrid instrument is the convertible debt. This type of security is an issuance of debt that can be converted to a company, common stock, or at any given time, right? So these are the three types of instrument, that is capital, money market instrument, and hybrid instrument. Yeah. So now we will be discussing about the financial services. Well, financial services basically refer to a broad range of economic activities, you can say, provided by financial institutions that facilitate the management of money, credit, investment, and risk. So basically, these services are essential for individual, businesses, and governments to effectively manage their financial resources to what? To derive economic growth and promote financial stability. So these are termed as financial services. Now we'll learn about the types of financial services. So the very first financial service is banking services. So under banking services, one, yeah, banking services you can say are the foundation of the financial sector, providing essential services such as what do we get at bank? The deposit taking, lending, payment processing. Okay. So also they include retail banking. So services for individuals and small businesses, including saving account, loan, credit card, also mortgages. Then there is corporate banking, which is a specialized a service for businesses such as working capital financing, trade finance, and also treasury management. Then there is investment banking. So that facilitates mergers and acquisitions, underwriting securities, and also capital raising for corporations. Then there is the fourth type of service, that is central banking. So under central banking, it is provided by central banks. For example, the Federal Reserve or European Central Bank. for the purpose to regulate monetary policy and maintain financial stability. So these are the basic, you can say, banking services like retail banking, corporate banking, investment banking, and central banking. Now coming to the next service under financial markets, the next service is insurance service. Well, insurance service provide financial protection against risk, such as you can say accidents, health issues, property damage, or any business loss. So, there are certain types of these insurance. The first one we all know as life insurance. So that provide financial security to beneficiaries after the policyholder death. Next one is health insurance. So it covers medical expenses and also healthcare services. Then we have property and casualty insurance. So it protect against a damage to property and also liability risk. Then the fourth type is business and commercial insurance. So that is, it covers risk related to businesses, operations such as liabilities, worker compensation, and cyber risk. So that is the second type of service, that is insurance services. So under this category, we have life insurance, health insurance, property and casualty insurance, and business and commercial insurance. Then next one is investment services. Well, investment services help individual and institution manage and grow their wealth through asset allocation, securities trading, and also portfolio management. So these services include the very first one, that is asset management. So under asset management, it provides professional management of investment portfolios for individuals, pension funds, and institutions. Then there is stock brokerage. So that it facilitates buying and selling of stock, bonds, and other securities. Then next is mutual funds. So pooled investment vehicle that provide diversified exposure to stock, bonds, and commodities. And the last one is private equity and venture capital. So that is, it provide funding to startups and businesses in exchange of ownership stakes. So that was investment services. Next service under this we have wealth management and financial planning. Well, wealth management services provide tailored financial planning and investment strategies for high net worth individuals and families. These services include retirement planning. So, structuring financial plan for post-retirement income is retirement planning. Then there is estate planning. So, that is managing asset distribution and inheritance planning. Also, lastly, tax planning. So that is minimizing tax liabilities through legal strategies. So that is wealth management and financial planning. Then next service we have payment and digital financial services. So technological advancement have revolutionized financial services, leading to the growth of digital payment and financial technology. So these key services include payment processing. So under payment processing, what will come? The credit cards, the debit cards, or the digital wallet, like you have PayPal, Apple Pay, all those. Then we have mobile banking. So banking services through mobile apps and online platforms. Next, under this category, we have cryptocurrency and blockchain services. So that is digital currency transaction and decentralized finance services known as DeFi services. Next one is BNPL. BNPL is known as buy now, pay later. So that is short-term financing for consumer purchases. So you can find this buy now, pay later on Flipkart and all those e-commerce sites. They also provide such kind of facility. Like you can purchase the things on a minimum amount of a rupee one or two, and you can purchase the product and pay later. Now, coming down to the next category, that is foreign exchange and remittance services. Well, foreign exchange and remittance services facilitate international trade and personal money transfer. So these services include forex trading, buying and selling currency for profit or risk management. Also, international money transfers, sending fund across borders via banks, money transfer operators, or digital platform. Then lastly, we have hedging services under this. So that is managing currency risk for businesses engaged in global trade. Now, the next category under this we have, that is risk management and financial advisory services. Well, these risk management services help businesses and individuals protect their financial assets and manage uncertainties. They might include hedging strategies and financial consulting. Now, we must understand the importance of these financial services. The very first importance is it contribute towards economic growth. So by it facilitate capital formation and business expansion as well. Then there is financial inclusion. So it expands access to financial resources for individuals and small businesses. Also, wealth creation. So it helps individual and businesses invest and grow their financial resources. And lastly, for efficient transaction. That is, it enables a smooth financial transaction in global trade and commerce. Also, financial services, you can say, is a very vital component of modern economies, ensuring the smooth flow of capital, risk management, and financial stability. So, with continuous advancement in fintech, digital market, banking, investment management, the financial service sectors is evolving very rapidly and making financial solutions more accessible to everybody, efficient, and also innovative in nature. So, with this, we are done with our financial services. Now, the next uh, topic over here is give me- yeah, the next thing over here we need to discuss about the financial system design. Well, the financial system designs basically refer to the architecture, processes, and technologies used to create and manage financial infrastructure that facilitate the flow of money, credit, investment, and also financial transactions. So, when we talk about a well designed financial system, it ensures efficiency, security, and stability in financial activities for individuals, businesses, and government. Now we'll discuss about few component of this design system. The very first component over here is financial institutions. Well, these entities facilitate financial transactions and include banks. So these banks could be retail, commercial, investment, or central banks. Then non-banking financial institutions like insurance companies, asset management firms, microfinance institutions. And lastly, fintech companies. Fintech companies are digital payment platforms, peer-to-peer lending platforms, or also cryptocurrency exchanges. So that is the first component, that is financial institution. Then next is the financial market, which we have already discussed. That is also one component of the design system, which consists of basically the capital market, the money market, foreign exchange market, and derivative market. Now, the next under the design category, we have the financial instruments. Well, these are the assets traded in financial markets, including equities, debt instruments, derivatives, and alternative investments. Now, the next pillar of these design system is financial regulation and governance. Well, regulation ensure financial stability and also investor protection. Key regulation bodies include, you can say, central bank, security regulation, also like international financial institution like IMF, International Monetary, World Bank, BIS, all those. Next is financial technology and digital infrastructure. Well, technology is reshaping financial system through the blockchain and cryptocurrencies, artificial intelligence and finance, cloud computing and cybersecurity, and also payment systems and digital banking. So that was all about the key component of financial system design. Now, we'll study about the steps in financial system design. So the very first step in this system is to define objectives and requirements. So for this purpose, you need to identify the financial function needed. That could be the banking, investment, or anything, or payments. Then determine regulatory and compliance need. So that is the first step. Then you need to choose the system architecture. That is, it could be centralized or decentralized design, or cloud-based or on-premises infrastructure, and also the API integration with third-party services. Then the next third step is to develop risk management strategies. Well, implement fraud detection and cybersecurity measures, and also to set up credit risk and liquidity management protocols. Then to implement technology and automation. So it uses AI, blockchain, and cloud computing for efficiency. Then next step is to test and optimize. So we need to conduct security testing and performance evaluation is done to optimize user experience and operational efficiency. So last one is deployment and continuous improvement. So that is uh, launch the system with regulatory approvals, continuous monitor and update to enhance security and efficiency. Now, there are certain, you can say, challenges in these designing of these financial systems. These challenges could be the cyber security risk. That is, increasing digital threats require robust security protocols. Then there are regulatory compliances and also system integration. That is, legacy system must integrate with modern technologies like AI and blockchain. Then we have data privacy and protection. And the last one is the scalability and performance. That is, growing transaction volume require high speed and efficient system. So that was about the financial system design. Also, this design is very critical to ensure stability, security, and efficiency in financial transactions. So by using these technology, risk management strategy, and regulatory compliance, a well designed financial system can drive economic growth, financial inclusion, and global financial stability. So, that was about the financial system design. Mhm. Yeah. We're having few minutes remaining. We'll discuss about key elements of a well-functioning financial system as well. Well, when we talk about the key elements, so a very well-functioning financial system is essential for economic stability, efficient capital allocation, and also financial inclusions. So it ensures smooth financial transactions. It facilitates investment and manage risk effectively. The key element of a strong financial system include the financial institutions. So the financial institution act as intermediaries between the savers and the borrowers, ensuring the efficient allocation of funds. So they include the bank, that is retail, commercial or investment bank. So it facilitates deposit, lending and financial transactions also. Then there are a non-banking financial institution, NBFIs. So these are insurance companies, pension funds, and the firms that provide financial services beyond traditional banking. So that comprises non-banking financial institutions. Then lastly, we have fintech companies. So those are the digital payment systems, P2P lending, and blockchain platforms. Next is the financial markets. Well, the financial market facilitates the buying and selling of financial instrument. So they include the capital, money, and foreign exchange derivatives. Next is the financial instrument. Well, the financial instrument are assets that represents our financial claim and are traded in financial markets. They basically include equity instruments. So stocks and share representing ownership in a company. Then we have debt instruments. Well, bonds, loans, and treasury securities for raising capital. Next is derivatives and alternative investment like real estate, commodities, cryptocurrencies. Now, the next element is financial regulation and governance. Well, a well-regulated financial system ensure stability, transparency, and also investor protection. So these include the central banks and the security regulators like SEC, FCA, and also international financial institutions like IMF and World Bank. Then there is efficient, next element could be the efficient payment and settlement system need to be there. So a reliable payment and settlement infrastructure ensures smooth financial transaction. So it includes the banking payment statement, that is SWIFT, ACH transfer, and real-time settlement, that is RGTS system. Then we have digital and mobile payments. So mobile banking, digital wallets like PayPal, Apple Pay, and Google Pay. We all know about these payments. Then there is cryptocurrency and blockchain based payments. So decentralized payment network like Bitcoin, right? So those come under this category. Then there is financial technology and innovation, the key element in system. So the technology is transforming financial system by improving efficiency and accessibility. So the key innovation include AI. So that is algorithmic trading is done and robo advisors are there. Also the fraud deduction systems have been made. So that is that. Next is the blockchain and cryptocurrency. That is the decentralized finance and secure transaction. Then also big data and analytics. So the credit scoring, risk assessment, and market analysis falls under this category of fintech and innovation. Now, the last element is risk management and financial stability mechanism. So, a well-functioned financial system must manage risk effectively to prevent crisis, key management tools could be deposit insurance like FDIC, or then we have capital adequacy requirement, like it ensures bank have sufficient capital reserves. Also hedging and diversification, that is use of derivatives and diversified portfolios to mitigate risk. Well, a well functioning financial system, you can say, is built on strong institutions, efficient market, secured payment systems, robust regulation, and technological advancement. So these elements work together to ensure economic stability, financial inclusion, and global financial connectivity. So by continuous evolving to meet modern challenges, financial systems play a very vital role in sustaining economic growth and development. So, with this, we are done with our first unit. So, I believe we just have very few classes left, and if at this speed we go, we won't be able to complete the whole units. So, in the next class, we will be discussing, yeah, the financial markets, the overview which we have given today. So, I'll just discuss about these markets, then classification of markets, money market. So these all we will be discussing in our next class. Probably next week we are having our next classes align 3 days. So with this, I'm winding up my class and I'm still here for a few minutes. If any doubts or any questions are there, you can post in the chat box. Thank you.